If we then move over to generally what's going on the vol side in crypto, realized vol, like I've said, remains stuck at the lows of the year. These markets just struggling to break out of the range. We did see some intraday vol around the CPI numbers, but it wasn't enough to get these 10-day realized numbers up, and implied vols continue to drift lower. We generally don't think these type of low vol levels are sustainable, but that, who knows? Does it break out in the next week or two? Does it need another month or two? I'm pretty sure by the end of the year we would have seen some volatility again in the space. But right now, I'm not rushing to buy short-dated volatility, given the horrendous carry right now. You can see these carry numbers. When these red bars are all positive, it tells us that it's not a no-brainer to own Gamma right now. Okay, if we then have a look at the term structures, no surprise to see all the term structures collapsing into contango. You got that front-end weekly stuff on a 40 handle on Bitcoin now, and Ethereum's dropped through the floor as well. That front end of Ethereum going sub 70, which we have not seen for quite some time. If you look at the realized spread between ETH and Bitcoin, that's actually kind of stabilized a bit. It got close to zero, but now Ethereum having a little bit more volatility than Bitcoin. So you're seeing on a 10-day, it's just under 10. On a 30-day, it's 15, and the implieds are sitting in the middle between 10 and 15. So the whole curve, all the way out to 6 months, is kind of priced somewhere between 10 and 15, which to us looks like fair value, which is why we don't have a position in the spread, on the volatility spread right now. If we just drill down quickly into the individual dashboards of ETH and Bitcoin, we see, we're up about 2% on the week in Bitcoin. Volatility hammered, 1 month down around 9 vols. Skew also hammered, down around 3.5 vols, down to about 5.5 vols in the 1 month skew bucket. And obviously that term structure steepening into contango. Carry positive at around 16 vols, which is in the 80th percentile, as markets, really struggling to do any more than sort of 2% either way. Strategy-wise, Strategy Compass is obviously saying buy vol here. I'd be careful about doing that. I haven't rushed out to buy any more vol. Why is that? Because the carry indicator is in the 80th percentile, is a positive carry, and we are much closer to max earn than we are to max pay. So you've got contradicting signs between what the Strategy Compass is saying, what the carry indicator is saying. Therefore, you don't blindly just go and buy a load of volatility unless you've got a good reason to do it. And right now, I don't have a good reason to do it. I do still like the idea of slowly accumulating longer dated volatility. You can see the long end, down towards 60%. It doesn't really go a whole lot cheaper than that. But the emphasis is on the word slowly accumulating. Okay, I'm not in a rush to go out and buy a load of this vol. I'd rather have a good reason to buy it. And right now I haven't got one. So I'm taking my time. I haven't piled into a load more vol. I've got a little clip of March 23 that I bought a while back on 15K puts. I've got some naked December 18K puts that are hedging out my Bitcoin exposure. They've been bleeding, so I haven't added to them or anything. I've been hoping for a pop in spot to 22K to be able to sell some calls, but I haven't got one, annoyingly. So I've ended up just having to take a bit of a premium bleed on the puts that I'm holding, unfortunately. So trying to be opportunistic about where spot was going to go, but spot just has not managed to rally, unlike some of the other assets out there that did rally as we expected. If we then look at the ETH dashboard, we can see it's the same story pretty much. Up a little bit better than Bitcoin, up 3% on the week. Vols down 8 vols, taking that 1 month to 67. Lowest levels we've seen since May this year. Put skew crushed back down to be in line with Bitcoin. So you'll remember that Ethereum skew was trading above Bitcoin skew for a while. People perceiving more downside in ETH. I still kind of agree there probably is more downside in ETH if we do get a break to the downside, because it's the higher beta asset. But for now, the skew repricing to be more in line with Bitcoin. Term structure, contango, not as steep as Bitcoin, so it has got room potentially to go steeper if things stay the way they are. Very decent positive carry at 20 vols. This one's in the 85th percentile, and that's going to empower the DOV sellers who sell weekly gamma every week. They're not about to stop, and if anything, I wouldn't be surprised if their AUMs increase if we stay in this low vol environment, because those yields will be consistently churning out nice carry. Strategy wise, nothing massively different to what I've already said. Patiently waiting for Vol to come cheaper before buying it. Don't see a massive rush to put on a big position in Vega right now. Seems like there's better places to deploy capital in the other macro assets than crypto right now. As and when that view changes, you will be the first to find out. All right. And then lastly, that's what I've been up to. What have the crypto guys in the space been doing? We look at the crypto option flows. We see Bitcoin, we did see opportunistic put buyers into October to play that CPI. But when we got that puke down towards the low end of the range, they didn't hang about and they monetized it. And vols came crashing back down as the market recovered. So that's what the put activity was generally centered around. In terms of the upside, call selling across the board. Because volatility is coming lower, the premium that you can get for selling calls in the 1 month is getting smaller and smaller. So people are being forced, if they want some premium, to go a bit further out. So people willing to sell, December, November options to get some premium because the October stuff just doesn't give them anything really. Okay. If you look at Ethereum, still seeing more dominated flows towards the call side. In general, we're seeing gamma selling in the front end. So you obviously realize it's been so bad, so you have to find a way to manage your theta bill. So these very short dated options in the local strikes around 1300, 1200 to 1300, generally sellers. Whereas we've actually still seen some directional upside buyers in the longer maturity. So you've got November call spread going up in good size, 1700, 1900, went up in about 35,000 options, which is a good chunk for Ethereum. And then we also saw some outright December calls being bought as well on that 1700 strike. So that seems to be where the directional bullish people are still playing for some sort of year-end rally. But in general, that front end, seeing sellers who are choking on theta bleed right now. Okay, so that's the flows we're seeing in the market.